Welcome to Byte-Sized Tech, where we blend casual conversations with insightful discussions on the latest in technology and gadgets. Today, we're exploring a stack of fascinating new tech developments, from shifts in AI strategy to electric vehicle battles, the buzzing IPO market, and even the evolving landscape of venture capital. Get ready for some major aha moments as we unpack these stories.
It's going to be quite the ride. The landscape is shifting so fast. Yeah, some really big moves happening.
Definitely. So let's kick things off with AI. There's this really interesting story brewing around Apple. For ages, it felt like the word was that Apple didn't really see a market for ChatGPT style tools, right?
Yeah, that was the impression. Apparently, they just sort of bolted it onto Siri for, what they called world dollar queries. Very basic, factual stuff.
But now it seems like there's been a big pivot, a change in thinking.
Oh, absolutely. It's become, very obvious now that a key use case, maybe the key use case for these LLMs is search. Just everyday stuff. Movie synopsis, how many calories are in this apple, quick history facts, things you'd normally Google.
Right, and people are actually changing their habits because of it. I read some users are even using the iPhone's action button now.
That's spot on. The sources say lots of users are setting that button to go straight into ChatGPT.
Yeah.
They're just skipping Safari, skipping the Google app entirely.
Wow, that's a fundamental shift in behavior.
It really is. And Apple's noticed they've reportedly formed a new team. Answers Knowledge and Information, AKI, they're calling it.
AKI, okay.
Yeah, it's led by Robbie Walker. He used to head Siri, but apparently there were some engineering issues, so he's moved over to lead this. The goal seems pretty clear. Build a search experience right across Apple's stuff that taps into the web. Basically, taking on Google, Gemini, Perplexity directly.
So a direct competitor in search, finally. Interesting. Okay, that's the consumer side, how we search day to day. But what about AI in the business world? The enterprise LLM landscape. What's the market share looking like there?
Right, enterprise. Well, the numbers are pretty revealing. Anthropic seems to be leading the pack, capturing about 32% of the spend. OpenAI is just behind them.
And it's mostly closed source models dominating, isn't it? Open source is lagging.
That's what the sources indicate, yeah. Closed source is definitely winning in the enterprise space right now. Open source seems to be falling behind a bit.
Why is that? I mean, beyond the obvious security angle, what else drives businesses to closed source?
It really comes down to, manageability, security, yes, but also observability. Businesses need the whole package, Running these things isn't like installing an app. You need serious infrastructure, services, support. It's got to be reliable, secure, managed. Closed source providers offer that whole ecosystem. It's just, more straightforward usually than trying to wrangle open source models at that scale.
And the spending reflects that need, I guess. The figures are pretty staggering.
Oh, totally explosive. The money being spent on LLMs has more than doubled, like from $3.5 billion to $8.4 billion in just 6 months.
Wow. That's incredible growth.
Yeah, it shows how fast companies are jumping in.
Yeah.
And while we don't have exact cost breakdowns, the feeling is the margins for these AI companies will be, respectable and probably improve over time with things like token caching, making things more efficient.
Okay, but this rapid AI growth, it's having some weird side effects too, right? Especially on the people side. I read about this trend, reverse acqui-hires. What exactly is that? It sounds kind of brutal.
It can be, yeah. So reverse acqui-hire is basically when a big tech company like Microsoft or Amazon swoops in and hires key people, often the CEO, maybe a core AI team from a smaller startup. But, and this is the key part, they leave the rest of the startup behind. The company, most of the employees, just left.
Oof, and this is happening a lot.
It's become a noticeable trend. Your sources mention at least 6 cases in the last year alone in Silicon Valley.
6? Wow. How does that hit the employees left behind? I imagine it's devastating.
Extremely distressing, yeah. Reports of people literally in tears. They join these startups, hoping for that big payday, the IPO windfall.
And then it just evaporates, for them anyway.
Exactly. The founders or a key team get their deal, but everyone else is left wondering what happened. It's rough.
Can you give some examples? Like what actually happens to the leftover bits of the company?
It varies a lot. With Cognition's acqui-hire, what was left of Windsurf. Well, not much, really. But then you look at Inflection after the Microsoft deal. They're apparently still trucking along, trying to keep the business going, even planning to raise more money.
Okay, so some survive.
Some do. Character.ai also had a reverse acqui-hire, and they're still operating. But then Covariant, after Amazon took Talent, doesn't seem like much is happening there now. And Adept, another Amazon target. It's apparently unclear who's even running the place anymore.
So this really shakes up that whole startup promise, doesn't it? That unwritten contract between founders and employees.
Totally. Prospective hires, investors, they're all starting to ask, will the founders stick around? Or will they just bail if a better offer comes along? It adds this whole new layer of risk.
Okay, let's shift gears. From AI to mobility, roads and skies, BMW is apparently taking aim at Tesla again. I remember they lost a lot of drivers to the Model 3 way back when.
Right, back in the day. But yeah, BMW's CEO Oliver Zips sounds pretty confident. They've got a new electric SUV, the iX3, coming in September.
And the plan is to win back those drivers. How?
Better specs, for starters.
Yeah.
The iX3 is supposed to have more range than even the long-range Model Y, charge faster, and have more power.
Okay, the numbers game. But I also heard something about super brains technology. What's that about? Sounds a bit sci-fi.
Huh, yeah, maybe a little. But it's serious engineering. They've apparently developed this, supercomputer for the car, a gigabrain they're calling it. It's got way more computing power. The idea is to make sure the EV still feels like a proper BMW to drive, that immediate response, good handling.
Keeping the driving dynamics.
Exactly. This system crunches numbers way faster for steering, braking, suspension, making the EV feel, like a BMW, but maybe even better than before. That's the goal anyway.
Interesting. Okay, speaking of EVs, Tesla. That huge $30 billion stock award for Elon Musk just got approved. The line is it's to keep him focused, right, given all his other ventures.
Yeah, that's the narrative. But there's history here. This relates back to that 2018 pay package that a court in Delaware actually threw out.
Right, I remember that. So this new award.
It has a really low exercise price, same as 2018, $23.34. And he has to stay CEO for 2 years, hold the stock for 5.
But shareholders must have concerns, surely. His focus seems pretty divided sometimes.
Oh, definitely. The sources mention worries about his political stuff, like threatening to start the America Party, and, of course, his other company, XAI.
Right, the AI company where Tesla shareholders have no stake.
Exactly. So there's this fear, maybe, that if he gets frustrated with Tesla, he might just, take his ball and move it over to XAI.
But the board argues he's essential.
Their argument is he's key, not just for attracting new talent, but for keeping the talent they have.
It's tricky. I mean, he did an amazing job when the stock went through the roof in 2020.
But the last year or two haven't been great, yeah. Negative headlines, that Florida jury award, poor delivery numbers from China.
So the question becomes, why write a $30 billion check now when performance has been weaker?
That's exactly what skeptics are asking. It pits his past success against recent struggles.
Okay, let's look up air taxis. Joby Aviation just bought Blade's helicopter rideshare business. That seems like a big move.
It is. Joby sees huge potential here. They're talking about unprecedented levels of regulatory support. White House, DOT, FAA, all pushing for this new age of aviation.
Regulators are actually on the factory floor.
Daily inspections on the manufacturing line, apparently.
Yeah.
So buying Blade gives them an existing network instantly. Takeoff spots, lounges, customer service experience.
So it's about accelerating their own eVTOL rollout, using Blade's infrastructure.
Precisely. It should speed up getting their electric vertical takeoff and landing aircraft into the U.S. market. Pull forward the whole timelines for commercial flights.
And they plan to keep the helicopter business running, or just use the assets.
No, they plan to operate it, grow it, turn it into something bigger. They think once their quieter aircraft are flying, the number of landing spots will just explode.
Makes sense. What are the deal specifics?
It's $125 million, stock or cash. Structured as a win-win, apparently. Gives Blade's medical transport side more focus and resources, too.
And what's next for Joby's own planes?
They've got multiple aircraft actually being built right now. The plan is for FAA pilots to start flight testing early next year, so it's getting closer.
Okay, back to the markets. The tech IPO window seems to be reopening. Figma was a huge success, right? Up 250% on day one.
Yeah, Figma was a great example. A really solid quality company, strong fundamentals, like 50% plus growth year over year, profitable, AI already in their stack.
Plus, that whole failed Adobe acquisition probably boosted their profile.
Definitely didn't hurt the brand. But that huge first-day jump really showed the pent-up demand. Both institutional and, increasingly, retail buyers are hungry after the IPO drought.
Does the traditional roadshow process even account for that retail demand properly?
Probably not fully. There's a lot of exuberance, maybe even irrational exuberance sometimes. Individual investors jumping in on day one, that's always risky. Stocks tend to normalize.
Yeah.
But the main takeaway is the window is open. But mainly for quality companies, ones that have been prepping for ages, got their fundamentals sorted, like Figma, Circle, CoreWeave. These aren't new startups. Many are 10, 15 years old.
We were probably ready to go public back in 2021 or 2022 anyway.
Exactly. The timing just wasn't right then.
And besides AI, what else is driving IPO interest?
Crypto is definitely the number 2 narrative. You've got successful IPOs like Circle, a feeling of a more crypto-friendly administration, big banks getting involved. It adds validation.
So companies like Gemini, Grayscale, they might be next?
They're reportedly looking at it, yeah. Shows the sector is maturing for public markets.
Okay, let's talk cybersecurity. Armis is booming. Looking at a 2026 IPO, they've hit $300 million ARR. That's significant.
It's huge. And they protect some major players, 40% of the Fortune 100, 6 out of 10 Fortune 10 companies. The demand is just massive.
What's fueling it? Still geopolitics and infrastructure attacks.
Yep. Continued tensions, attacks on critical stuff like water systems, ports, airports. And AI is actually adding to the demand too. Creates new threats, needs new defenses.
And this platformization trend, companies wanting fewer, bigger security solutions.
That's a big driver. Nobody wants to manage 70-plus different tools anymore. They want 5 or 10 solid platforms. Armis sees this. They bought 3 companies in the last year to build out their 7-product superpowered platform, trying to meet that need directly.
Taking on the big guys like Palo Alto Networks and Microsoft.
Absolutely. They're aiming for $1 billion in ARR as the next big milestone. They talk about building a generational business. So they're acquiring and building aggressively to grab market share by aligning with what customers want now.
Right. Lastly, let's touch on funding, specifically diversity in VC. There's some good news there, isn't there? Progress being made.
Yes, actually quite significant progress. The percentage of women and non-binary folks in decision-making roles at U.S. VCs has doubled since 2017. It's almost 20% now.
Doubled. Wow.
Yeah, and they hit that goal 3 years early. So there's real momentum changing how firms operate and, importantly, what gets funded.
But it's not across the board, right? The mega funds are lagging.
That's the catch, yeah. Firms over $1 billion in assets are doing better, but the really huge ones, over $10 billion, still struggling. Only 3 women hold managing partner roles there, according to your sources. So still work to do at the very top.
What's the core argument for diversity in VC, beyond just fairness?
It's simple. Performance. Diverse teams consistently outperform. They also just better reflect the actual market. And think about this. There's a projection that $100 trillion in wealth will shift to women by 2048. That's going to reshape the entire economy, including VC.
100 trillion. That's staggering. And does it change investment patterns? Do women VCs invest differently?
The data suggests yes. They're twice as likely to invest in women CEOs at the seed stage.
Which brings funding to potentially overlooked areas.
Exactly. Consumer, healthcare, education areas where women often drive purchasing decisions.
Yeah.
Look at Maven Health, women-backed, huge innovator in health, valued at $1.7 billion. It shows the value that was being missed.
And groups like AllRaise are helping push this forward.
Yeah, AllRaise is a nonprofit doing great work. They help women and non-binary VCs get a seat, keep a seat, and be wildly successful, as they put it. Lots of programming, networking, skills building. They had over 200 volunteers put in thousands of hours just this year. Building that community is crucial.
We've covered a lot today, from AI redefining search and corporate structures to electric cars gaining superbrains, a revitalized IPO market, and crucial shifts in how venture capital fuels innovation. Consider how these rapid technological shifts are not just changing our gadgets, but fundamentally reshaping the unwritten contracts between companies and employees, and even who gets to build the future of our economy. What piece of today's tech landscape excites or concerns you the most for tomorrow? Thanks for tuning in to Byte-Sized Tech. If you enjoyed the episode, like, comment, share, and subscribe for more fun tech discussions.